Petrol just hit $3.30 a litre, premiums costing $4 at some Auckland petrol stations, and banks are raising mortgage interest rates, and everyone's asking the same question. Is the Iran war going to crash the New Zealand property market? Well, to answer that, first we need to understand what actually happened to house prices during the four most recent oil shocks. Then we'll learn if this time it could be different. And finally, I want to show you why higher petrol prices don't hit you as hard as you might think. And I should be upfront about my own bias. I own 5 investment properties and my company helps investors buy new build properties. So I've got an incentive to tell you that everything's all fine, just keep buying investment properties. I'm not going to do that. I'm going to show you the data and let you make up your own mind. Now, in late February, the US and Israel attacked Iran and Iran retaliated. Iran effectively closed the Strait of Hormuz, which is this narrow waterway, not much wider than the Cook Strait, that roughly 20% of the world's oil exports passes through each and every day. So the oil can't get out to the rest of the world, supply goes down, and that is exactly why oil prices spiked. I mean, Brent crude went from about US $72 a barrel to over $100 a barrel, a jump of around 40%. In fact, the International Energy Agency called this the largest supply disruption in the history of the global oil market. And because we here in New Zealand, we import pretty much all our refined fuel, right? Mostly from Singapore and South Korea, and they get most of their oil through the Strait of Hormuz. This impacts us directly. And if you're finding this useful, do me a quick favor and hit the like button, because that's how I know which videos I should do more of. And honestly, it really helps with the YouTube algorithm. Subscribing, that helps too. You guys have already helped us build the largest property investing community in the country, and we're on our way to growing this channel to 50,000 subscribers. And if you do already subscribe, you might be wondering if all this disruption could cause house prices to crash. I studied the 4 most recent major conflicts and how they have impacted oil prices, and then what happened to Kiwi house prices. And what I found is that in 1973, we had the OPEC oil crisis. Oil prices quadrupled, and it was brutal. But over the next year, when oil prices were high, Kiwi house prices actually went up 34%, which sounds like an oil shock could be good for house prices, but in reality, it was a wild time right back in the 70s. Inflation was already raging, so there were lots of other factors at play which caused Kiwi house prices to go up. Then, in 1991, we had the Gulf War. That was when Iraq invaded its neighbour, Kuwait. Oil prices spiked. The US Army, they went in. New Zealand house prices fell about 2% over those 9 months. So it might sound like the war, the Gulf War, caused Kiwi property prices to go down. But in reality, New Zealand was already in recession before the war started, and New Zealand's GDP had been falling since about 1990. So again, there were some other factors at play. It wasn't like higher oil prices caused New Zealand house prices to directly go down. I mean, if we look a little more recently, in 2003, we had the Iraq War. Now, this is the one that seems most similar to today. This was when America invaded Iraq looking for weapons of mass destruction, and again, the price of oil spiked. What happened to Kiwi house prices? They rose 22% that year. Now, again, was it the oil that did it? Is that why Kiwi house prices went up? Well, no, interest rates were falling, migration was strong, and there was a real structural housing shortage. It was the housing market fundamentals that pushed prices up. It didn't have anything to do with the price of fish. And then in 2022, most recently, we had the Russia-Ukraine war. New Zealand house prices fell 7.5% during that time that oil prices were high. Again, that sounds devastating, but the drop had nothing to do with the price of oil. It was that house prices had gone bananas. They went too high over the COVID-19 fueled property boom, and the Reserve Bank had started hiking interest rates. On top of that, the government brought in a law that meant you couldn't get a mortgage if you spent too much on Uber Eats and Kmart. So sometimes the price of oil goes up and house prices go up, and sometimes the price of oil goes up and house prices come down. But it's got nothing to do with the price of oil. It's got everything to do with everything else going on in the economy. And when Russia invaded Ukraine in 2022, I had 4 investment properties at that stage. Everyone was panicking, but I didn't sell a single one, and I'm really glad that I didn't. Having said that, who knows how long this war might last and how oil prices might actually go. There is so much uncertainty, and I don't want to pretend that I know everything, right? But I know that if you look at any crisis, often investors who hold for the long run do okay. And I also know that while it's easy to keep your eyes glued to the latest headline or the latest petrol price change, sometimes it's just worth keeping calm. Though you might also be asking the question, could this time be different? And the main reason people worry about that is that if the price of oil goes up, usually the price of everything else goes up too. I mean, it takes oil to make the farmers' tractors go, and then to get the milk and meat and vegetables from the farm to the factories and eventually out to our supermarkets. It takes oil to ship products from China to the port of Tauranga, and even more to move those products off the ships and eventually into the local warehouse. So if the cost of oil goes up, those costs get passed on to the businesses that need that oil and eventually passed on to us as consumers in the form of higher prices for all of the stuff we need to buy to live. Now, you might think, doesn't that mean more inflation? Because if the price of stuff goes up, that is by definition inflation, and therefore the Reserve Bank might respond with higher interest rates because they might want to get inflation down. And of course, if interest rates go up, doesn't that put house prices under pressure? After all, ANZ, New Zealand's largest bank, just upped their 18-month to 5-year interest rates by about 0.2%. That was the week after the war started. Westpac and BNZ, some of our other major banks, they did the same. But here's the thing that most people don't understand. The Reserve Bank is unlikely to raise the OCR, at least not straight away. And the reason behind that is raising interest rates in Wellington won't open up the Strait of Hormuz. It won't get more oil into the ships. It won't bring inflation down overnight. In fact, it often takes about 1 to 2 years from the Reserve Bank increasing the OCR for it actually to have some effect and start bringing inflation down. So if the Reserve Bank increases their interest rates, call it tomorrow, by the time it has any impact, the Strait of Hormuz might be open again and the price of oil might already be back down. And then they've just kneecapped their economic recovery for no reason. And that's basically what the Reserve Bank Governor, Dr. Anna Bremen, said in a speech in late March. She said that a short-lived disruption and a temporary increase in petrol prices can and should be looked through if it's unlikely to impact on medium-term inflation outcomes. And she also said that she will not rule out either rate hikes, so increasing the interest rates, or rate cuts, bringing interest rates down. In plain English, she's basically saying, we're not going to panic, we're not going to raise rates quickly. And she even said that increasing the OCR now would not bring inflation down immediately, but it would hamper the economic recovery that New Zealand is currently having. And here's the bit that really surprised me. Westpac actually wrote that it would be folly to entirely rule out scenarios that could lead to interest rates coming down. And that's because if the war damages the economy in New Zealand, we could get weaker rather than stronger, and that's where the Reserve Bank might need to step in to help our economic recovery along by lowering interest rates. I'm not saying that is exactly what's going to happen, but Westpac is saying you can't rule it out. Now, the second reason oil probably won't make house prices drop like a stone is that New Zealand house prices are already about 14.6% below their 2021 peak. We've already had our property market downturn. House prices have already corrected. It's unlikely to be a double-decker downturn. And that's why you see that the experts aren't panicking. Kelly Eckel, the chief economist at Westpac, said that he doesn't think that there's any call to cancel the recovery just yet. And if we think about Calvin Davidson, he's the economist at Cotality, formerly CoreLogic, he said that personally he'd make no different decisions off the back of the war compared to what he would have done before it. The biggest threat to your wealth right now isn't the war, it's the panic. And then lastly, the housing shortage hasn't gone away. Infometrics, they estimated that we still have a national shortage of about 40,000 homes, specifically concentrated in Auckland. So we actually don't have a surplus of houses. And in a market without that surplus, you get a stall of the market as opposed to a crash in property prices. Though there is a big risk, which is about how long this war actually drags on. Look, if the war ends quickly and the Strait of Hormuz reopens, oil drops or the price of oil drops, petrol prices drop, and we go back to where we were. If it drags on for 6, 12, 18 months with the price of oil above, call it US $120 a barrel, if it gets to the $200 a barrel that Iran is threatening, that does change the calculus, and that's where we'll need to look at even more analysis. And if you're watching this and thinking, I don't know whether to buy, hold, or wait, or what I should do with my property portfolio right now, that's exactly why I built the OPEC Wealth Pathway. This is where you work with a financial advisor who can look at your specific situation, your income, your properties, your equity, your risk tolerance, and help you figure out whether now is the right time to make a property move for you. Because that question of what should I do? It's a really personal question, not one that I can answer for you right here on YouTube. Head over to opuspartners.co.nz, click the big orange button and choose an advisor and find a time that suits you for that free session. I'll also drop a link down in the description. But I also want to give you some perspective and let you know that the truth is that higher petrol prices don't hit the average person as much as you'd think. The average Kiwi uses about 16 litres of petrol a week. So if the price of petrol is up 80 cents a litre since the war began, we're talking about $12.80 a week. Now, over the course of the year, that adds up to about $600 a year, which is some serious money. And some people are massively impacted because they drive way more than average, like this lady who has to ferry her child from doctor's appointments multiple times per week. But if you're the average person, we're talking $12 a week for a single car. And when I've shared that stat with New Zealanders, a lot of people think, you know what, I can actually handle that. Now, I don't want to be insensitive and understate the impact that this has on some families, which is why the government is giving $50 a week extra to some families. But I also don't want to overstate the impact that petrol price increases have on the average person, which for most people will be quite manageable. The reason high petrol prices really rattle us is that petrol is the only good where the price is advertised to you multiple times as you drive down the road, and they legally need to show you it. It's not just the constant reminder of high petrol prices in the Herald or Stuff, it's that you see the price of petrol 3 times when you're on your way to work. The other thing I uncovered during my research is that the average person on the street overestimates how much the cost of living is actually going up. So while professional economists might forecast 2 to 3% inflation, the average punter on the street is expecting 5 to 6% inflation. That's not to say that professionals are always right and the average punter is wrong, but the trend I see is that regular people tend to overestimate the increases in the cost of living because we pay attention to the things that go up in price, but we tend to ignore or not pay as much attention to the things that go down in price. So here's a simple rule of thumb for you. For every $10 increase in the price of a barrel of oil, that adds about 0.1 to 0.2% to inflation in New Zealand. Now, it sounds tiny, but if oil goes up to, say, by an extra $40 USD, well, that starts to stack up from about 0.4 to 0.8% extra inflation on top of whatever we were expecting. Now, that does mean more inflation, but not runaway inflation, and perhaps not as much as you might think. Look, I don't want to gaslight New Zealanders in terms of saying this is all good, but what I'm trying to do is give this some perspective in terms of how this actually impacts the average Kiwi. Some people can afford that extra $12 a week and others can't, but it's just to say this is the scope of how much this could impact you. It might be less than you think. And look, it would be so easy to create a YouTube video where I tell you that the world's going to hell in a handbasket, everything is terrible, and nothing is ever going to get better. And if I did, this video might get 10 times the views. But I just think as well as the panic, you deserve to hear some perspective. But now I want to hear from you. What are you doing with your property plans right now? Comment buying if you're still moving forward and wanting to buy. Comment waiting if you're hitting pause until this blows over. Or comment selling if this has completely changed your mind and you want to exit the property market. And while we're talking about comments, someone recently left a comment on one of my videos saying that my strategy is the worst way to invest in property. And honestly, they made some pretty solid arguments. So I made a whole video breaking down if the way I invest in property is trash. Tap the video on your screen and I'll see you in there.